Hello everyone, it's Susie from Esoteric Trading Solutions. I hope you're all well. I hope you're being kind to your family and friends, being kind to your animals, and you're just making this world a better place. There's a couple of things I'd like to talk about today. This article from Fortune was released on the 29th of the 6th, and it's talking to fellow Kyle Sammani, who's basically talking his book, being short Ripple and Litecoin, and being long Ethereum and EOS. And it's an old market tactic to tell the market what you're doing in terms of your position, so that people actually follow you. So it's called talking your own book. So I'd like to talk about that. Also, something specifically states in the article which I'd like to address as well. And I'd also like to talk and discuss what's been said by the SEC by William Hinman, who's the head of corporate finance area. So if we go to what he believed is the definition of securities, which I'm incredulous because I actually don't agree with him at all. His definition was that basically Bitcoin and Ethereum didn't fall in the definition of securities because they were decentralized, and also he believed that people didn't buy and sell to make money, and that's just ridiculous, because no one goes into the market and expects to lose money. They expect to make money. So I just don't believe that he's right, Mr. William Hinman, in terms of your definition under the Security Exchange Act of 1934 and under the Securities Commission Act of 1933. So it just doesn't seem consistent with me at all, because Bitcoin itself is not decentralized in the sense that it's controlled by 4 major miners out of China, who have now moved to other countries because China's made mining illegal. And those 4 miners can basically hold Bitcoin technology to ransom in the sense that they can decide when to transact and validate a transaction, and also they can decide in terms of their charges what to charge people in terms of validating a transaction and pushing it through the system. And we have seen over time that when the system gets queued up, the processing of those transactions can take a long time, and you could be waiting more than 2 hours or even up to 48 hours at its worst. And that happened about 3 to 4 months ago, when Bitcoin transactions were costing $55 US. Also, he's focusing on the nodes, and as you know, Bitcoin's probably got about 16,000 or 21,000 nodes. Ethereum's got about 16,000 nodes, and I just think it's focusing on the wrong thing when we're talking about securities law. As I've said before, ICOs, prospectuses, are all funding tools. So what I mean by that, let's go back to what I was saying in other videos. If you do a share issue, a primary initial public offering on the share market as an IPO, you're doing an issuance of shares to fund the company, those shares don't have to pay dividends. You don't have to pay dividends. It's up to the company where they want to pay, so you don't have to pay dividends. So you're basically funding the business. If you do a bond issue, initial public offering, you're doing that to fund the business bond issue. Both those shares and the bond will trade in the secondary market, where people expect to buy and sell and make money. And they do it through a third party on the exchange or not on the exchange, over the counter like the bond market. And they buy and sell with another counterparty at a price, at a time, expecting to make money at a price. Now, the ICO market, in my mind, is no different to the funding tools of the bond market. The ICO market is a funding tool for the technology of a foundation or of a private company or something else. It's a funding tool. Money comes in for the existing technology or for the technology that's got to be put together to fund the technology in the program, or money comes in with the ICO to maintain the technology, because developers that maintain the technology will not work for nothing forever, and they need to be given something, whether it's the coins or whether it's money from the value of those coins. So think about the ICO market as being a micro subset of the company or the foundation. Rather than funding the overall company, you're funding the technology, a micro subset, if you want to call it that, within the company or the foundation. Once it goes onto the secondary market, in my mind, it is a security, no different to any other security that trades on the secondary market. A security does not need to issue a coupon, and it doesn't need to issue a dividend. That's a fact. The secondary market means that it's going onto a Binance or any other crypto exchange where there's a buy and a sell. Someone's profiting and someone's losing money, and we're all going to the market for the same thing, to try and make money at a certain price. Now, what William Hinman said is, it just doesn't make sense to me. You can't say to me that Ethereum and Bitcoin on the secondary market don't smell, they look like securities, and they trade like securities. And you can't tell me that they're not, because the technology is decentralized. It's completely two different things, and it's not a consistent argument. Now, I understand if someone says to me that a token is a utility, and, it's like a flyby or something like that, and it's used within the system and there's no value on that token, then in my mind that is not a security. But the thing is, if that token trades on an exchange where someone's buying and selling that, and there's value in that, then in my mind it smells and it looks like a security. So the essence is, it is a security. So let's have a look at the Security Exchange Act that came out in 1934. And it's very foreign currency, treasury stock, bonds, debentures, profit sharing agreements, leases, royalties, collateral trust certificates, investment contracts, certificates of deposit, puts, calls, options, warrants, derivatives, indices. Also, it even mentions foreign currency. It mentions basically, any sort of thing where, essentially, it's basically tradable, and, tradable on a secondary exchange. So it's fairly, even in the definition of derivatives, it's got foreign currency in there, forwards, foreign currency here as well. And this is the Act of 1934. Now, I know they're also talking about the Howey test, but again, the Howey test doesn't specifically talk about the secondary market when the security is actually trading on the secondary market, or the cryptocurrency, and that's my whole point. These things are trading on the secondary market, and they act and smell like securities. So I have to say I do disagree with Mr. William Hinman about that, and I don't agree with it at all, and it's very inconsistent to have something being classified as not a security because he sees it as being decentralized, when it's a matter of what you're actually looking at to whether a cryptocurrency is decentralized or not. Even if Bitcoin, as I said, has 21,000 nodes, if it's got 4 major groups controlling the processing and the validating of those transactions, then it's irrespective of whether it has 21,000 nodes. You know what I'm saying? So, and it's the same like with EOS, for example. If EOS has got, in terms of their broker one, or what do they call themselves? Sorry, what's it called? The organisation that controls their admin and all their compliance in terms of the blockchain, the whole foundation thing. If it's controlling all that and that's what it's doing, then essentially it doesn't matter how many nodes it has. If there's one or two major people or organisations that are controlling the protocol and the way the structure of the coin's technology works, then it makes it centralised in that sense, and that's a real fact. So also what I want to do is go back to that article again, the one of Kyle Sammani and him talking his book, and that's what people do in those positions, just like, for example, Jim Kronos, who's a very, very well-known equity player, investment manager, and he has huge positions on, and he'll basically, tell people whether he's long Microsoft and long Apple and short GE. And what happens is, and again, as I said, it's called talking your own book. What happens is the retail element hears it on the TV, and they go out there and they buy Microsoft and they buy, Apple, and they sell GE. And so therefore it helps him make money. Well, the same thing with this Kyle Sammani. That's what he's saying. I'm actually long Ethereum, I'm long EOS, regardless of all the troubles, and I'm short Litecoin, and I'm short XRP. But there is a comment in that article that I'd like to go back to and basically, have a chat about that. So this is the article. Kyle Sammani talks about, he acknowledges that there's been problems with EOS, and he acknowledges that there's been problems with Ethereum, and again he's talking his book and he's telling everyone to basically get long the Ethereum and EOS. Excuse me, I'm just going to have a drink of water. And then he's telling everyone to sell Litecoin and XRP. But what he does say down here, and he does talk about Ripple, XRP, being deemed as a security by the US financial regulators. Now, as I've said to you guys, in my mind, all crypto securities that are trading on a secondary exchange should be deemed as securities, not just XRP. All right, that's what I believe. I truly believe that. But what he's saying, and he's pinpointing out Ripple, and obviously pinpointing the negative, so that XRP sells even more down because he's short and he wants it to, so he makes more profit and gets many more revenue. He then goes on to say, if it's a security, this is what he says now, and this is where I really disagree vehemently with. He says, my point is, if Ripple is, XRP, if it's labelled a security formally by the SEC, and don't forget, formally the SEC hasn't formally acknowledged formally that Ethereum is not a security and that Bitcoin is not a security. They need to write formally in a formal, paper, formally, that becomes law, that these things are securities and these things aren't. And I can't see how you can have one being a security and one not being a security. Anyway, but what this Kyle Sammani says is, my point is, if XRP, I'll call it XRP, is labelled a security formally by the SEC, he goes on to say all crypto exchanges are going to stop trading Ripple, XRP. And he says if that happens, liquidity is going to dry up on XRP and the price will plummet. Of course he's going to say that because he wants everyone to start selling, all their XRP, which I can assure you I will not do that. But he is totally incorrect in saying that, totally incorrect. And the reason why is, number one, all the crypto exchanges at the moment are not regulated. Number two, just because if XRP was classified as security, it's actually a good thing for XRP to be classified as security because it opens the door up for a bigger client list. In other words, huge traditional fund managers, not hedge fund managers, but traditional investment managers that manage trillions of dollars worth of superannuation money can buy XRP. It's actually a good thing because the wholesale market can come in and buy XRP. Number 3, the wholesale market would look at the value of the technology of Ripple and would treat XRP as being a surrogate of the value of the technology of Ripple, which is how it should value the coin. The retail market doesn't value the coin that way. Ripple's technology is the best of breed. It is the only company, the only crypto that can do what it does. No other crypto can. It can instantly settle foreign currency anywhere in the world, instantly within 1 to 3 seconds, and in volume, and up to 2,000 or 3,000 or 4,000 transactions per second. And it has another system where it can do 50,000. Now, that's number 3. Number 4, probably. Number 5, no other crypto out there has the security and the compliance checks that Ripple has in terms of its technology. Number 6, and I can go on, Ripple has been talking to the Federal Reserve of the USA since 2015 and the Bank of England since 2015. Both are extremely familiar with Ripple's technology and XRP. And a matter of fact, I wouldn't mind betting, and I'll be on record for saying this, I wouldn't mind betting that the Fed could even use Ripple's technology. And I'll be on record for saying that. Or even the Bank of England. Ripple, as a company, is the most amazing company in terms of the marketing, in terms of the outfit. They have got some serious heavy hitters. They know what they're doing. The other day, Ripple basically put an ad out there to employ salespeople to sell XRP, which includes, as you know, the use of XRP. Now, they are employing heaps of salespeople. As I said before, it's a process. It's a process. You get people used to XCurrent, they get used to the technology, you go out and you fish for more prospects. I've been on the sales side, trader, salesperson all my life. You go out and you get people to use the technology first, to get comfortable with it, and that's with XCurrent. And then, once they're comfortable with the technology, you then sell them the XRP, which is XRP. Now, they make a fortune with the technology. They get paid a fortune in fees. That's why Ripple early last year, had a cash pool of their own money of $15 billion. That cash pool is up to probably around $25 billion by now. That's why Ripple, the company, can invest in other startups and blockchain and make investments where it makes those startups and blockchains use XRP. Also, the technology of Ripple has smart contracts, and they have a platform which they're going to start wheeling out and selling, and they could go into direct competition with Ethereum. Another point, am I up to about 10? Ripple's technology has never had any hacks. Okay, now a lot of coins in the top 30 have had hacks. We know Ethereum via Deo had a hack, then Ethereum Classics had hacks. I don't know about Bitcoin. I'm sure it probably did somewhere along the line, but I won't say definitely. But again, we know Bitcoin Gold, we know Verge, we know all sorts of, cryptocurrencies that have been hacked, or is this a problem with their technology? Anyway, coming back to this point, I'm getting a bit sidetracked here. Coming back to this point, this is totally incorrect because the crypto exchanges are currently unregulated. The crypto exchanges aren't going to give a rat's ass whether XRP is classified as a security or not. So the crypto exchanges don't care. The Binances of this world and Huobi, who make so much money, the founder of Binance has come from nowhere. He used to work for Bloomberg. In a year, he has made himself $3 billion, right? And now he's expanding in Malta, Africa, everywhere. And he's made himself $3 billion. They're unregulated. They are not going to care whether a cryptocurrency is a security or not. This, Mr. Kyle Sammani, is just scare tactics. Absolutely. But my point is, though, this would never happen. And I tell you what, if the downside was it did happen, what Ripple would do, and they're that smart, is they'd say, okay, if you're going to classify XRP as a security, we're going to do an IPO, an initial public offering. This is what I would do. And these guys would get corporate finance advice from the biggest investment banks like JP Morgan, and JP Morgan would tell them what to do because I know what they'd tell them to do. They'd say, you know what you do, guys? You basically do an initial public offering with shares, so you're going to list. You're going to list on the American NASDAQ stock exchange, and you know where the NASDAQ's gone in the last, 10 years since the financial crash. You know where the Dow's gone. The Dow went from 6,200 in 08 to now 24,500. Okay? And it got up to 25,000 or 26,000. But what JP Morgan would say to Ripple is list your stock shares through an initial public offering, go to the market because you really are another Google. Put your shares out there, anything from 600 to 700 US, and then say to the XRP holders, and again, I'm not talking my book, but I can say this, then JP Morgan would advise them, say to the XRP holders, for every one XRP you hold, we will give you one share. And Ripple can do that. You can make an asset swap. Very easy in the financial markets to do. Very easy. Okay? And they can do that. All they have to do is buy back XRP, and I've said this before, they can very easily do it. Buy back XRP and give the holders of XRP shares. Simple. 1 for 1. That's a very easy thing to do. And they can do it. And companies can buy back their own cryptocurrency, or they can buy a cryptocurrency, or they can buy a share, or they can buy a bond. Or they can burn the currency, the cryptocurrency, or they can basically buy it back and cancel it. Now, Ripple can do that quite easily. With the company, they can issue shares. They don't need the money, but they can certainly do that because the share market will value the security properly. Not like the silly cryptocurrency market that doesn't value Ripple's security or, its cryptocurrency properly, because Ripple is a very profitable business because of the technology and it has no debt. That's why I'm saying if it got on the stock market analysts would actually value the company shares where they should be. And my point is XRP should be valued very closely to where the shares would be valued. So ultimately, my belief is Ripple would not want to see the XRP holders disadvantaged. They would offer them a 1-for-1 buyout, which would be basically happy days for every XRP person out there that holds XRP. So I disagree with you, Kyle Sammani, on this point. So I guess the whole, sorry, it's been a very long video and I had a lot to say, but I disagree with quite a few things. So it's all from an educational perspective, and obviously, and I don't take into account your own financial. This is not financial advice. It's all from my own thoughts and education point of view. It's not financial advice. I don't take into account your financial position or anything like that. It is for education only, and I'm not a financial advisor, but it's just years of experience in the market, and and I always think a lot about what's going on. So I hope you're all well, and I hope you get something out of this. And I apologise for being so long, but I had a lot of audio troubles today for some reason. I'm not sure what's wrong with my audio, but I disagree with this completely, absolutely. So and the thing is, if the worst happened, my belief is Ripple would make a buyout for XRP, and basically whoever holds it, they would replace them with shares, and that would make some very, very happy people with XRP. Anyway, thanks guys. I hope you enjoy this, and I'll talk to you soon. Please take care, and I'll talk soon. Susie.